Good morning, Story Trading VIPs. We got a lot to talk about. In just a second, we're going to bring on Dan Carlson to talk about INMB. After that, we got the GDP print to talk about. Meta had earnings yesterday. TDOC, a huge miss. We want to talk about the read-through on that through DRIO. Some other stock-specific news with JAKK Pacific, JAKK, Real Network after the bell, Clearfield, Apple, Amazon. So we'll get to all of that. But first, we're going to welcome in Dan Carlson from Tailwinds Research. How you doing, Dan?
Good. Thanks for having me, Ben. How you doing?
Awesome. Doing great. The reason I brought you in is yesterday I noticed SAVA, which is right at the top of our watch list over there, was down huge yesterday morning on some criminal probe. It actually recovered pretty nicely from 14, and pre-market was like 13, up here at 18. So I saw that news about a criminal probe over Alzheimer's data, which may have been fraudulent. So obviously that immediately brought INMB to my mind, and thought it was a good time to catch up, particularly because I also noticed on the same morning, yesterday morning, they had a press release that earnings are coming out next week. So those are the three Alzheimer's plays up there: SAVA, AVXL, Anavex, and Immune Bio. So I would love to hear your perspective on what happened with SAVA. Will some of that money flow to Immune? What's coming up for Immune?
Yeah. So thanks for having me. It's an interesting topic. I don't know if you've noticed, but I've been recommending shorting SAVA since well over $50 a share.
Oh wow.
And frankly, have thought it was a fraud for years, but timing of these fraud situations are always the tricky part. So my understanding is with regards to SAVA, that the trials they run have been very. I mean, this is a rebuild of a company that failed before. I forget what the prior name was. There's even speculation that they named it Cassava because they were thinking about going after some sort of a cannabis play, but then switched to what they're doing now. The trials they ran were not placebo controlled. They said they claimed cognition, but they when you don't have a placebo unit, you're going to get cognitive benefit from just giving people a drug when they know they're on it anyway. The placebo effect, right? So scientifically, this company has had major questions, and then you throw in the speculation that it's all based on fraud, and this is one that I think you have to actively avoid. So I would say that in terms of how it affects Immune, I don't know is that any money is going to flow from one to the other. It doesn't, I don't think that's going to be the case. I think it actually is, if anything, there probably will be a little of that, but it'll be more of casting a pall on Alzheimer's, where, the only drug ever approved in Alzheimer's was Aduhelm, and it's a kind of failure. So
which one is that? I thought it was, isn't Aricept Alzheimer's drug?
There are drugs for treating the symptoms, and there's drugs for treating the disease. And the only one that's ever been approved for treating disease is Biogen's Aduhelm.
Okay.
That I'm aware of. And that's, like I say, it's been a failure. So this space has been a quagmire forever, and it remains that until something is approved. What's interesting about Immune, if we switch gears, is that they've been saying all along that these neurodegenerative diseases like Parkinson's, Alzheimer's, etc., are caused by inflammation. That's the story they're telling. It's a very different spin on the traditional story, which is this amyloid and tau and plaques and tangles, right? But when you look at Cassava, the most recent report that was published about 4 days ago talked about how the pivotal trial behind Cassava could possibly be based, the whole thesis behind it, on fraudulent information. That was from 2006. So what that article was saying was that every bit of Alzheimer's research since 2006 that's been focused on amyloid and tau was, and that's multi-billion dollars of research, was pushed in that direction by a fraudulent article. And that sort of fits in with the INMB thesis. Like, you're looking at this thing wrong. Amyloid and tau are symptoms of Alzheimer's. The disease brings them on, not, they don't lead the disease. So I really think that the whole Alzheimer's and CNS story is shifting in INMB's direction, and more research is talking about inflammation and less talking about amyloid. And like I said, there's never been a drug that works. So eventually you have to switch gears, and that's what's happening now, I believe.
Okay, a couple questions. Why do you think SAVA gained back all its losses yesterday? Number one.
Massive short position, probably some covering.
Right. Okay. And then the other thing is, I noticed SAVA has a market cap of 750 million, AVXL 800. I always say AVXL, and AVX 832 million, INMB Bio 165 million. That seems to be a huge valuation gap based on all the rosy information you've been giving us about INMB's drug. Why that huge gap in valuation?
It's a function of a couple things, in my opinion. One is, as I've just said, they're approaching this disease differently. So if you go to a healthcare focused hedge fund, they are probably starting to look at inflammation as a driver of Alzheimer's, but they've been typically looking at the public companies that are out there, Biogen, Lilly, and how are they going after this, and how's everyone going after this? So INMB's been a little bit off the radar screen because of that. And then if you look at how they went public, they didn't use a mainstream bank. They've kind of done this on their own to some degree outside the typical biotech route, which has enabled insiders to continue to have a very large position here. And insiders have been, buying stock aggressively and putting money into this company, so they believe in it. But at the same time, so many companies, I'm sure you've seen over the years, they do a discounted deal with some options, get some funds, and then their word gets out to the community, and that just hasn't happened with INMB.
Okay. All right. So what are some catalysts?
Sorry, I lost you for a second there. Sorry.
It broke up a little bit, but we caught it. So I know there's earnings next week. I did get back in. I wasn't completely out, but I reduced my position pretty dramatically back in November with the risk sell-off that was starting. And yesterday added more, partially because of SAVA news. Was that a good move? What do we have coming up?
Yeah, I think it's a great move. Like I say, I don't necessarily think that the SAVA news is a benefit here, but you do have earnings next week and a shareholder update, and there's two things out there that are going to happen for INMB, and the timing of them is the only question mark, but they're coming soon. And the FDA has put a hold on their phase 2 program for Alzheimer's, manufacturing related. The company has been pretty public in saying that it's manufacturing, it's not a drug issue. And the FDA is kind of understaffed and overworked at this point. And they think they believe it's just a function of that, and they're in communication with them. So that could be removed at any point in time. And I think that will be a major driver for this thing starting to be valued as a phase 2 Alzheimer's, not a phase 1, which will re-rate it.
It's interesting that news, I believe, came out May 24th. That's where you see the gap down from 727, went all the way down to 463 the next day. But the stock is already hit over 10, well above when that bad news came. Do I have the timing right on that?
Yeah, that was the day the FDA complete response letter came out when it hit 460.
Okay.
And basically, the fact that the stock rallied is a function of people believing it's a temporary issue, and then also the XBI rallying during that time as well, right?
Right.
But the other piece of news that I expect to get a good update soon is on their INKmune program, which is the one that doesn't get as much attention, but it's a drug they have for cancer. working on NK cells, and they're in a trial over in the UK. And the UK is kind of a cluster for doing trials right now, just because of COVID and the way they run trials there. And they've had trouble enrolling patients, and they've actually had amazing results on the handful of patients they have. So hopefully we get two things out of that. One is I'd like to hear on their update next week that they've enrolled another patient, which I think would be pretty beneficial here. And maybe they've enrolled a couple more. Maybe they'll talk about when results are coming. But also they're pushing to file an IND in the States to have that drug be used in ovarian cancer. And it's these cell therapies have all shown effectiveness in these blood cancers, but not really in solid tumor. So there's a chance that they get that that drug going here in the U.S. solid tumor trial, and it's there, and they believe they'll see it. Obviously, would be huge for the stock. So that's sort of what's coming there. But I do think you'll get a good update on that program next week.
So two catalysts I'm hearing: lifting that manufacturing hold that will take the company into phase 2, and then some progress on the cancer front. Those two things you expect potentially soon. And
I
is there any
the next month you can get both of those?
Oh wow, that'll be good. And is there any risk of an offering before those things happen? What's their cash position like?
No, they get like 60-something million in cash, and their burn is not that high, so they get plenty.
Okay, cool. All right, so two good catalysts potentially coming up. Earnings next week. What was the date of that earnings report here? August 3rd, Wednesday, August 3rd.
Yep.
That'll be before or after the close? After the close. So next Wednesday after the close, we have INMB Bio. Any other things you wanted to add, Dan?
That's sort of it for Immune and Cassava. So.
All right, great. Yeah, we've been following Immune for a long time. If you want to follow Dan, he has his own platform, newsletter service. Where do people sign up for that?
twresearchgroup.com. It's a free weekly newsletter, and there is a premium service if anyone's interested. So I'd love to talk to anyone about that if they're curious.
All right, great. Thank you for joining us this morning, Dan. Appreciate it.
All right, thanks, Ben. Always a pleasure.
All right, take care. All right, there you have it, Immune Bio. We got a lot of other stuff to talk about now here. So first, GDP print minus 0.9%. I'll tell you why I didn't talk about it yesterday, and I really didn't care about it this morning, because in a week where we're getting all kinds of earnings data, we're getting the Fed interest rate decision yesterday, all of that is forward-looking. There's commentary, there's guidance about things happening, like what causes a GDP to drop. It's the interest rates raising. It's some of this, commentary that you can hear on the conference calls and the earnings reports. Those are the things that could cause GDP to drop. In other words, GDP provides no real valuable information because it's all rear facing. It's not forward looking. If there was no other news this week and this was the only thing that was there, I would have put more weight on it. But I'm sticking with the analysis we had yesterday morning, that we thought we were out of the woods, basically. When we started this week, we thought Apple was the FOMC and Apple were going to be the two big events this week to determine if we're going to continue a bull market rally. Are we correct? But after yesterday morning, as we talked about, after we saw the market reaction to Microsoft and Google on their misses and the positive guidance from Microsoft going forward, I had shifted my opinion on that. I said, you know what? I think we're out of the woods. The expectations are already 75 basis points for the Fed. There's going to be no surprises there. And Apple, based on how Google and Microsoft reacted, would really have to have a disaster after the close to derail this rally. So I don't think that's going to happen at this point. So I basically had the green light yesterday morning before the Fed came in. I started taking more risk. I started buying stuff yesterday morning. I still feel pretty good about this, and I didn't care about GDP at all. By the way, I think this is a preliminary number, minus 0.9%. So that's a story there. It's really not a story. I'm ignoring GDP print today entirely. It looks like the market is as well. In fact, it's up on that negative GDP print. All right, so we're good right now on the QQQ, I believe, and we'll see what Apple has to offer. If it's not a disaster, I think this little bear market rally we're having can can continue. You see a 2050 bullish cross on the QQQ right here. You see Apple is at a critical point at the 200 DMA right here, very close to it. So tonight's earnings report can decide if it's going to hit that and pull back, or if it can possibly break it. But right now, I think we're in a decent spot with that. So cool and relaxed, taking on more risk since yesterday morning. And let's go to some other news over here. We had Meta earnings after the close, down 4%. Not a surprise. I really don't care about this one either. I mean, it's a given that advertising is the first thing to go in a mild recession. It's not like a huge warning of anything, right? You expect advertising to go in a mild recession. We already know it's been soft because of Snap and Google and the social media companies. And I don't think Meta earnings are going to be really impacting the direction of the market. So I'm paying no attention to that. Comcast, however, down 8%. Comcast, I think they reported their first subscriber loss like in its history or something like that. I didn't have a chance to read the report, but I think I heard about it on the radio here this morning when I was coming in. So Comcast did beat on the top and bottom, but I guess it had an issue with their subscriber count. So we're seeing signs of recession, signs of consumer discretionary spend impacting, and we'll see that. I believe we'll see that in the Apple report today. The question is again, is it already priced in, right? So that's the question there. Teladoc had a huge miss. Down, it's rebounded a little bit, down to 18% this morning, 31 to 36. Now, a lot of this miss. Okay, let me break this down. I read the whole transcript because of a possible read through for DRIO. First of all, in the headline, you had a huge EPS miss, but that was because of a large impairment charge, which I think is probably still attributed to Livongo. I think they said it's also attributed to the stock price decline. I'm not an accountant. I don't understand why stock price decline would lead to an impairment charge. I think it makes more sense that it has something to do with Livongo. But anyway, that's an accounting thing. They didn't really lose billions of dollars, right? So the only real negative thing besides that headline, and I think possibly in extended hours, you see an exaggerated sell-off here because people are looking at the headline. You're getting a little bit of a rebound, but there was some negative guidance going forward on a couple items. So they said their guide is going to be in line with the previous guide, but on the low end, right? It's going to be on the low end of their guide. But they also said due to macroeconomic conditions, due to macroeconomic uncertainty, it's possible they'll come in either above or below that guide. So they're keeping the guide from the previous quarter, saying they're coming in at the low end, but saying you can't really rely on it. It could be above or below that because of macroeconomics. So a couple things impacting Teladoc, which some of it could be a positive for Geo, some a negative. One of them is that employers are taking longer to make decisions now because they're watching their pocketbooks, right? The HR departments that are deciding, do we want to give this as a benefit to users? They're taking longer to make those decisions. So that's something that could impact DRIO as well. The other thing is the direct-to-consumer portion is suffering a little bit. They're seeing competition on that end. Not from DRIO in this case. DRIO is going away from direct to consumer and more to the B2B to consumer. So they're seeing private competitors in the direct to consumer space. They're blaming it on these private competitors basically spending too much money on advertising with a very high acquisition costs. They're not going to compete with that. So losing some market share to these private competitors in the direct to consumer space. So that story there doesn't really impact DRIO, except it's good that DRIO is leaving that area, and they've been actually reducing their spend significantly over the last couple of quarters in direct to consumer as they focus more on the B2B2C side. Now, there was one item in there that you could argue is either a good thing or a bad thing for DRIO. It's that Teladoc did put a big emphasis on their earnings call about this multi-condition chronic management. which is actually what DRIO offers, right? And they've been saying that that's also part of the reason they're having a little bit of trouble signing people up, is because people are switching from single condition insurers and employers to multi-condition platforms. Now, DRIO has a multi-condition platform. They mentioned that there's competitive noise that's hurting them. Is that competitive noise DRIO? Are they getting some of these contracts that TDOC isn't? But on the other hand, which it confuses me a little bit, is that TDOC has their own now multi-condition platform offering. They actually rolled it out maybe even a little bit later than DRIO. It's just come together the last few months here. Their multi-condition platform for mental health and diabetes and blood pressure monitoring. They have all that now. And not only that, but they also bundle it in with telehealth now. And they highlighted a recent win they got because they bundled all of the chronic health management together with telehealth. Now, DRIO doesn't have the telehealth. They only have the chronic health management. So it was kind of mixed messaging in that. I didn't really understand. They're saying, hey, they're losing business because of this shift towards chronic health management. Have this multi-chronic health management, and it's even better because it's with telehealth. So we'll have to wait to see how that reads through. At this point, DRIO has not had that big news that it was expected by the end of June to get the national insurer on. So at this point, we may have to just wait for earnings in a week or two. So far, we don't see any negative reaction in the price action towards DRIO. So last time TDOC had a really bad miss last quarter, it actually did impact DRIO pretty significantly at the open. It did subsequently recover pretty quickly because DRIO put out a statement privately circulated among all the analysts of why they're not TDOC and why they're in a better shape. So perhaps the market's calm about that prior note passed to analysts about why the TDOC issues are not going to impact DRIO. So DRIO's steady for right now. We'll have to see what happens. A few other things. We had MasterCard earnings was a beat. I was never worried about Visa and MasterCard earnings. Visa also beat. Visa and MasterCard, they're not really impacted by inflation. In fact, inflation is good for them because they charge a percentage off the top, right? And overall spending isn't really coming down. That's not the issue here. I know GDP is down a little bit, but that's not the issue. The issue is, where is that money going? Is it going to food and energy, which reduces budgets for consumer discretionary? That's the issue. Is it reducing profit margins because of high input costs? That's the issue. None of that really impacts companies like Visa and MasterCard, which is why I brought Square in here. Square, they also have an e-commerce thing, like similar to Shop. So I'm not sure what the breakdown is between transactions that Square does at the terminals and online versus their e-commerce portion, which is probably suffering like Shopify is. So, but I'm bringing this to the forefront. I just posed the question yesterday in our VIP research room. Is it time to look at Square, research Square, look at its fundamentals? Maybe potentially it's time to research that. And who knows, based on our findings, it could be time to get in. So just putting that out there. Man, JAKK Pacific still tearing it up this morning. Last night, when someone brought it to our attention in the VIP research room, the stock was about 22. Now it's 24. They absolutely demolished earnings. I mean, these numbers are mind-blowing. I will say this is you can't analyze these numbers. 210 beat, $2.02 EPS with a revenue beat double of what the estimate was. If you analyze that, that's over $8. You can't analyze it. This is a seasonal business, so be careful with that, right? If you analyze it, you're talking about a 3 PE right now, okay? This requires some research. I'm not chasing it, but it's on my radar to look at. New 52-week high this morning. Potentially, if it does some sort of gap fill in the morning, maybe I'll take a small position while we research it a little more. Other news: Real Network is being taken private. You can see it's up 17%. Definitive agreement with the founder for 73 cents. The stock's at 68 cents, so not much room left there. He already put in a proposal a few months ago, and the stock really didn't rocket on it. But now on the definitive merger agreement with his a private company he owns, it's basically just a merger arb play. 5 cents left in that if you're looking for it. Man, it's 1 minute till the market opens. We got to be fast. Today, Apple earnings after the close. That's what we're waiting for. Amazon earnings after the close. I'm not so worried about any of these anymore. I think there's plenty of data in from other companies that neither of these are going to surprise the market. So I think we're good. Clearfield, this is our Trade of the Week pick on the Wolf Financial Spaces show. It's been on a tear. It might hit a 52-week high ahead of earnings. I don't know, but congratulations, Chris Harbert. Thank you so much for bringing this to our attention. It's a core position for me now. PLAB hit a 52-week high yesterday on the backs of that chip bill. Market is opening right now, but we have to keep going because there's a little more I got to cover. So PLAB, new 52-week high. Air, we nailed the bottom on Air and then in the low 10s yesterday. I closed out all my short calls on that. PLAB, I think we see continuation here at a 25 to 27 level. This is only a 5-year chart. I can't go all the way back. If you're on my desktop charts, you can see the next resistance levels to me is somewhere in 2650. There was a candle around 27. There was a candle. I'm rounding it down to 25 psychological resistance. We're at 2344 this morning. So congrats everyone in PLAB. IPI, my other trade of the week pick. So I have IPI and Clearfield. It's up this morning 1%. Their peers, CF, really strong charts in the potash space. CF, look at that, over the 50 DMA. I really like the charts on CF and to a lesser extent Mosaic, but I also really like the fundamentals in the catalyst with natural gas and agriculture making a rebound over here. Moss right at the 50 DMA. So I think we could get the move I was looking for on IPI. I was looking for 50 that both IPI and Clearfield doing well for competition. However, I am losing the competition. Why? Because of Enphase. Enphase was picked on the Wolf Financial Show. This is just on fire. Why is Enphase up? Why is all of these? Ready? LTH, Enphase, TAN, Plug, Shoals, which was a pick from prior week on the Wolf Financial Spaces show. Over the $20 target that I had, the 200 DMA, gapping above it. Man, if you are in some of these names, I think it's time to take some off the table. LTHM, I'm sell. I think right after the show closes, I'm going to sell it at 25 right here at the two resistance levels, or I'm going to sell covered calls. Why are all these up? Because of a inflation reduction bill that passed the Senate last night with Joe Manchin's help. I don't know why it's called inflation reduction, because a lot of this is geared towards money coming into the alternative energy sector. They specifically call out hydrogen. This is why Plug is up 21%. They specifically call out nuclear. This is why you have uranium, CCJ, UUUU up 4%. You have NewScale up to another 52-week high right now. SMR, a new 52-week high at 1386. So all of these stocks doing well on that government intervention, that government help into this sector. So that looks really good. Man, it's 9:32. I got to take off here because I do want to sell some of the LTHM. And listen, I would not chase any of these other names, Enphase or anything like that. Enphase is close to 52-week high. Wow, Enphase, 282 is a 52-week high. They're a shoe-in. I don't think I can win this competition. It looks like Enphase is going to win. I did pick up more UUUU yesterday because it broke the 50 DMA. So I like the uranium, actually, I think can run on this. So I wouldn't chase the solar stocks. TAN, it's just been up too much. What, you're chasing that? No, I'm not chasing that. But I think the uranium stocks, it's just another catalyst. This bill last night, which can send these uranium stocks a multi-week run. I like the charts I'm seeing in these. They look like they're good for swing plays. UUU maybe can make it to 750. So I feel good about CCJ, which I own, UUU, which I joined, UUUU, SMR. And again, the solar ones, I wouldn't chase them. Congrats if you're in them. Real big congrats if you're in them. And I'm missing my chance to sell LTHM at my target 25. So I got to run, folks. Got to make some money. Thanks for joining us. We'll talk to you next time. If I can get this exit going. Where am I at? All right. Ready? We got a little technical glitch. And I can't even find my music here. All right, guys. See you later.